Welcome friends. In this video, we will look at Xcn coin compression and when it can explode. Don't forget to like and subscribe, and please listen carefully until the end. On the 1 hour chart, the downtrend from above is still in effect, and there is no clear breakout yet. The price has repeatedly touched this trend line, but each time it has retreated, meeting resistance. Although buyers are trying to push the price up, it has so far failed to break above this downtrend. However, if the price breaks this level and holds above it, we could see a strong, bullish move. In such downtrends, it is critical that the price repeatedly touches and fails to break the resistance level. Because the more times it is tested, the stronger the move can be when it breaks. In particular, the price needs to reach enough buying power to break this level. If a breakout comes with volume, it could signal a trend change, and buyers may gain more power in the market. Otherwise, the price may move down again and remain under selling pressure. Currently, the fact that the downtrend continues to work as resistance increases the uncertainty in the market. The question of whether buyers or sellers are stronger at this level will be answered depending on the direction of the breakout. If the price breaks this level and makes a sustained move above it, the uptrend is likely to accelerate. However, if the downtrend cannot be overcome, the price may enter a new bearish wave. From a technical analysis point of view, if the price breaks above the falling trend line, the next resistance levels should be carefully monitored. When the breakout occurs, it usually boosts the confidence of buyers in the market, and the price may accelerate towards higher levels. However, in some cases, even if the price breaks out, the move can be a trap. For this not to happen, the price needs to stay above this level for a few candles, and a wave of volume buying should follow. Currently, the price has repeatedly touched the falling trend line but failed to break through it. Such structures often offer important clues to understand whether the breakout will be strong or not. If the price breaks this level, there will be a psychological shift in the market and investors may buy more, contributing to a higher price. However, if the price bounces back from the downtrend, this could indicate that the selling pressure is still there and the bears are still strong. Therefore, the current structure is at a critical point. If the price makes a breakout to the upside, the buyers may take control and the upward movement may accelerate, but it would be very good if it makes a retest to give confidence. If it does that, it will make a very good breakout. But we need to look at other indicators because we need to be sure that we don't make incomplete analysis. According to the Elliott wave theory, price action is currently about to complete an important structure. The first wave has been successfully completed, and the second wave seems to be nearing its end. Usually, the second wave is a correction after the sharp rise in the first wave. However, this correction phase seems to be coming to an end, and the market may be preparing for a new bullish wave. If the analysis is correct, the third wave will begin after the second wave is completed, and this wave usually contains the strongest and biggest move. The third wave is known to be one of the most profitable waves for traders because it's during this phase that prices gain the most upward momentum. From a technical analysis perspective, the minimum target for this wave is the 1,618 Fibonacci level. However, depending on the strength of the third wave, it may reach higher levels. In such Elliott wave structures, the completion of the second wave is a critical turning point, because when market participants realize that this correction is over, they can accelerate the third wave by buying more. If the price gets a strong reaction from this level, and the upward movement starts on volume, it could be the start of a new small rally. The start of the third wave, especially with a voluminous rise, shows that buyers are taking control of the market and makes the uptrend more solid. Also, the second wave is often a process that makes traders nervous and causes indecision in the market. However, according to Elliott wave rules, once the second wave is completed, the direction of the market becomes clear, and the third wave starts a strong move. Therefore, the current structure gives quite positive signals for investors. If the price moves as expected, it seems likely that the third wave will accelerate sharply upwards and reach a minimum Fibonacci level of 1,618. It may not only be limited to 1,618, but if the momentum is very good, it may go to higher Fibonacci levels. There is also a descending wedge pattern on the chart. At the moment, the price action is towards the end of this pattern and is getting more and more squeezed. Descending wedge patterns are often considered a strong bullish signal, as this process, where the price moves in an increasingly narrow range, indicates that buyers are gaining strength and sellers are weakening. Looking at the current price action, it appears that the final stages of the squeeze are approaching. This means that the price is now at a critical point and could decide its direction at any moment. Descending wedge patterns inherently have the potential for a bullish breakout, and when this happens, there is usually a sharp price move. If the price manages to break through the upper trend line, a fast bullish wave can be triggered by a strong acceleration. One of the most important features of this type of pattern is that when the squeeze ends, there is a sudden move. Because the longer the price is stuck in a narrow area, the harder the breakout can be. This is because the longer it stays stuck, the more likely it is to break out to the upside, and the higher the chances of seeing a sharp price move with volume. What we should pay particular attention to is whether the price will stay above it after the breakout. If the price doesn't pull back after the breakout and stays above the upper trend line, the upside is likely to accelerate further. We should patiently wait for the price to explode. Looking at the RSI indicator, the falling trend line on the RSI has been tested a total of 3 times so far. In technical analysis, it is very important to test a particular trend line or support resistance level multiple times, as these levels start to weaken with each contact. The more times it is touched, the more likely it is to break. This means that the RSI indicator may have gathered enough strength to break this falling trend line. The presence of a falling trend line, especially on momentum indicators like the RSI, usually indicates that the market is still under some selling pressure. However, the most critical point to note here is that this downtrend is weakening. The fact that the RSI is touching this trend line more and more often and strongly suggests that sellers are now starting to lose their strength, and buyers are starting to gain more control. In technical analysis, triple contacts often mark the critical threshold, and if the RSI breaks this level to the upside, the market's trajectory could change drastically. Falling trend lines are among the structures that cause the price to be suppressed for a certain period of time. However, when such trend lines are broken, there is usually a strong momentum to the upside. When the RSI breaks this downtrend, it means not only a change in the indicator, but also a major shift in the overall momentum of the market. This is because bullish movements in the RSI usually encourage price to move upwards as well. If the RSI breaks this falling trend line, we can see that the market is gaining more bullish strength, and buyers are taking control. Such breakouts are also of great importance in terms of market psychology. In technical analysis, when the RSI indicator breaks a falling trend line, it usually reassures market participants and encourages more traders to buy. As a result, the price is more likely to enter an uptrend. If the RSI breaks through this trend line with strong momentum and continues its upward movement, price action may also accompany this uptrend. Especially if the RSI breaks above the 50 level after such breakouts, it would be a strong signal that the momentum in the market has completely shifted in a bullish direction. Looking at the current picture, the RSI indicator is at a critical point, and the potential to break the falling trend line here is increasing. If the RSI does indeed break through this level, a sharp move upwards with the price seems quite likely. This is because, technically speaking, a bullish RSI move indicates that the overall momentum of the market is shifting in a positive direction. Especially if the price follows the movement of the RSI and supports this breakout, we may witness the beginning of an uptrend. At this point, one of the most important factors that traders should pay attention to is whether the breakout is actually permanent. The RSI can sometimes make short-term breakouts, but after a strong breakout, the RSI should resume its uptrend. If the RSI continues its rapid upward movement after breaking through the falling trend line, this confirms that the uptrend is healthy and strong. And if it also performs a retest after the breakout, it gives confidence. Also, when the RSI breaks the downtrend, the price will surely break it, so both will increase. Yes, friends, we have come to the end of this video. Don't forget to like and subscribe. These are important if you want to see more videos like this. See you in the next video.